Good afternoon. This Tuesday, June the 3rd, action today in the grains. News stories out of Ukraine and Russia again, along with the cattle market having a big reversal. So let's take a look at the headlines and get to the charts. First, at about 7:45 a.m. this morning, it was announced as the grain trade was looking for a reason why it bounced off the morning lows, 15 cents on wheat, while Ukraine, they again took another run at the Kerch Bridge. The Kerch Bridge, of course, important to Russia getting their wheat out. A third of their wheat goes to that bridge. An attempt was made at a pillar, and this pillar is actually one of these pillars right here. And this 12-mile bridge, a third of all the wheat from Russia transverses underneath this bridge. And so Ukraine is trying to make pressure economically on Russia, as obviously Russia has ruined the Ukraine economy. And the question is, even though the wheat trade and corn trade shied away from moving further on this action, things are building. And what if Russia tries to retaliate by taking out Odessa? So we'll see. But right now, we had another attempt at resistance on Monday. Of course, this morning's trade made another push at it just to have us come off on the trade. But when you look at the daily continuation chart, we have a lot of support underneath the market here. And on the December Chicago wheat chart, I see a building head and shoulders bottom. Left shoulder, head, right shoulder. Now what you need is a breaking of the neckline, as we call it. You see it as a trend line, but it's a neckline. You take this out, of course, that was the high on Monday, when this line was fully known and almost challenged again today. So something needs to push us through this, and you'll have a V bottom with the head and shoulders bottom. Very explosive potential move on that. Now, what can that be? Well, if it's not Ukraine or Russia, maybe it's the harvest coming through the south. We've had a lot of disease in that market. Rains continue. They would like it to dry up. They're hoping for it to dry up. They think it's going to dry up 10 days out from now, but the disease, the rust, is allowed to do more damage. You can lose anywhere from 5 to 80% of your production due to rust. And so Kansas wheat, yesterday, challenged trend line. This morning, challenged at moving average. I mean, what does it take to push through? And you can kind of see a smaller version of a left shoulder, head, and a right shoulder that could see a burst through the neckline. And then it's like shoot and ask questions later on that trade. Wheat did bolt through the green line, and kind of like the last time, it was a 2-day run and then quickly rolled over back to support as there's rain in the forecast for Canada 10 days out. The rain forecasts that are more than 10 days out, you have to take them with a grain of salt. So with that, we could still see further strength because past green breaks have been better than this. We've seen multiple, a week or two of strength, and then they roll over. So we missed our sale of old crop grain by, 3/4 cent on the bottom side of the range, pulled back, but maybe we get another run at it following the Chicago and Kansas City markets on their potential move up. Now, corn also bounced on the news, but maintained, its minor gains off of yesterday's massive breaks, as forecasts are not so rosy when we go way out into the distance. Now, our friends at BAM Weather, BAMWX.com, you can go ahead and check them out for a free trial. They are saying in week 3 and 4, going out here in June, they see much above normal temperatures coming into the northern plains, above normal, working its way into the Corn Belt, and they tie that with some potential below normal moisture working also into the Midwest. Now, of course, this is 3 weeks out. This is guessing. Are they right all the time? No, they get it wrong sometimes too, but they're right there when it's right. So you got to give it with a grain of salt. I've been following for years, and I'd give them about, right, better than 60% of the time. 66% is 2/3, better than half, less than 2/3. So, take note. And this is why we put out that alert that said, if you're looking for something to buy with grain so depressed right now, you can buy the short-dated September corn calls. They're new crop. They go against the December contract. And you buy a 470 call for 9.5 cents. So if the market bolts through 480 on weather scares, which that's only 40 cents away from us right now, you can explode. And then if you're at 5, who knows, 510, 520, 530, whatever it is, you can make a grain sale with more confidence, knowing that you're not just giving up the massive price potential to the upside on a sale too early. And so with that, corn, massive outside day down yesterday. We had said in the newsletter it's probably so bad that we're probably going to get a minor bounce. Did get a minor bounce, more so on the corn. We showed this trend line yesterday. They pushed it overnight. Of course, the changing of the news with the attack on the Kerch Bridge, along with this kind of flipping of long-term weather models, perked it up a little bit, but we never took out no previous highs. Put a key reversal up, but that's not exciting until you start taking out previous day's highs. Every day for what is it, 8 days, a lower high. So we got to change that tune to get excited before you look at this trend line support being anything of significance. Yes. Is it bottom picking? You bet it is. First the month possible low potential. Yeah, possibly could be that. Here's end of March, 1st of April. You can see here a low put in place. So let's see what we have on our next chart. So we're moving on. This is July beans. I forgot to leave the header on this one. Falling through the 50-day moving average, bounces back to 1050 are a sell. Likely starting wave 5 to the downside. November beans, they fell through their 200-day and 100-day moving averages. Major resistance on recovery to 1030. We have 50% sold over 10.5 on the new crop. If you have done nothing, here's a chance for you to get caught up on it on this bounce, because chances are here's a 1, 2, 3, 4 stop at the bottom of wave 1 and then do another push lower. So something to be aware of. On cattle today, this is the August contract. We had strength, substantial strength in the morning that gave way later in the day as it was announced that, well, were rumors as of yet, Cargill closing a plant potentially. Well, they're just losing money at some of these plants in Iowa and Nebraska. They're going to cut the bleeding here somewhere. And of course, that helps back up numbers, so to speak. So other plants have better access for the slaughter and can make some money. So we stopped the August contract right at the 78% retracement of the prior high. And I want you to notice outside day down and another outside day down. Higher high, lower low, lower close than the prior day. You put that on the continuation chart, we barely made a 62% retracement. Again, outside day down on the continuation chart. Break lower, another outside day down. This implies the board does not want to go meet the cash. It's like the cash is going to break hard and fast, probably into June, come to meet the cash market. Remember, this is the August contract. This contract only cares about the cash market the last days of August. June cares about what Texas is doing in the last days of June. So a lot of room here. So we could easily see the cash market into late June come off 20 bucks. I mean, they went up $5 a week here for several weeks. They could easily come off pretty quick if they can create a bust in the market. August cattle or maybe October cattle find their way in a wave C down to 201 or even trend line support here as we pull off an ABC off of this 5-wave advance that got completed in early May. Feeder cattle getting to almost a 78% retracement for a B wave. We've been showing you this since last week that they could do it to 305. They got just shy of that, broke lower in a key reversal, not an outside day down, but key reversal gets your attention. Now we'll see if there's some follow through selling tomorrow. Again, perpetrating here a potential wave C decline that could almost go to trend line. This would probably knock some socks off if we got down to 282. First, you got to get through major support at 288 to 290, which would be our first target for a bounce. But we'll see. One day at a time here. The discounts to this cattle market versus the cash trade, kind of tough to play, so to speak, when you always have a cash market stabilizing and then the board wants to firm up a bit and take some of those discounts out. This is Eugene Grainer with Heartland Investor Capital Management. Hope you find this information useful.